All right, kids, should we do the actual math on Klarna valuation and then basically do the apples to apples comparison with M-Kopa? Because I sort of did it freehand in my Q&A that I posted last night. But why don't we get the math, and I'm going to cite all my sources and post this document on the document library on mkopashareholders.com. So let's start with a basic. If you follow public companies, you might have seen something called earnings per share. And mature companies that have stable margins that have been around for a while, say your Safaricom, or in the U.S. your utilities, your banks, your Procter & Gamble, your consumer goods companies, these will trade at a price earnings ratio, and depending on the industry and the company's specific positioning within the industry, that ratio might be more or less. But for the most part, like well-run companies will trade at similar multiples. Now, for companies like M-Kopa and Klarna that are sort of fintech, that are onto a new way to deliver a traditional product, which is lending to buy goods such as a smartphone or other things, they tend to be valued by the market based on a revenue multiple. And Klarna right now is a listed public company and is trading at a revenue multiple, because you can't go on an earnings multiple because they're not quite there yet. Like, they're sort of built up and they're just reaching sort of break even. And I would say M-Kopa is roughly in the same boat. And I'll do a separate session on the financials to show basically how similar they are. Like, it looks like the same company, just like M-Kopa today is like Klarna was like 5 years ago. But like the margins, the balance sheet, so much of the company looks similar, other than maybe the emerging markets bias for M-Kopa versus Klarna, which is a developed market bias, but some emerging markets that's instructive. But why don't we just go the simple valuation? So this is basically, here's a little finance lesson. This can be from for aspiring chartered financial analysts, if you like. This is going to be quick and dirty, but we're going to basically take the valuation that Klarna has, adjust for the number of shares, adjust for the revenue size, and then back into a share price for M-Kopa. The result may shock you. Let me give you a spoiler alert. It's not $26, okay? So first we need to see, let's get the most recent revenue estimate for M-Kopa for 2025. So most of the time this revenue is kind of forward-looking, like current revenue. Like, the past is interesting, but like if you have a higher growth rate, so it's more like what you're doing this year. So for 2025, M-Kopa does not publish it. They only publish annual. So I have a May estimate, so where they said $500 million in revenue for the year. M-Kopa achieved an impressive compound growth rate of 42% for the 2020 to 2023. The company's accelerated even faster since 2023, delivering 65 blah, blah, blah. M-Kopa is continuing in the same profitable growth path in 2025, and is trending to surpass $500 million in annual revenue this year. So my guess is they took the first quarter revenue and they annualized it by multiplying by 4, because this was published in May in the Financial Times. And that makes sense with what I know about what the revenue was last year. That seems like a good estimate of the growth. So instead of earnings per share, we're going to go to revenue per share. $500 million from the source of that is M-Kopa. 4,506 shares. The source of that is my own records of the legitimately issued shares. There's other shares that have been issued that basically are not approved, so I'm ignoring those. Some of those conceivably, if they consulted the ordinary shareholders, could be approved, but right now none of those shares are approved. So this is all the kind of legitimately approved shares before they started giving away shares to like their favorite people to reorganize the ownership of the company, which they did in 2019 and 2021. And I'll show my source on that at the end of this document, and this document will be in the document dump. So I've got Financial Times colors because this is from the Financial Times. Isn't that cute? So $500 million in revenue and that many shares. So you've got revenue per share of $110.95. So for every one share of M-Kopa that's outstanding, there's $110, $111 of revenue this year based on their estimates and what they're publishing to the Financial Times. And that sounds right. I don't think they're bluffing on that number. So here's the math. I'm just going to show you all the backup. There's the backup for this. Here's the math here. I'll show you the evidence for that share count in a little bit. Okay, so $110.95 per share. Okay, so interesting. So that's how much revenue is available per share. So if you took the revenue and somehow hypothetically you were able to direct it to each share, it'd be $110.95. Okay, but we don't know what a share is worth. What does it mean? Because it has a claim on that much of the revenue. What is it worth? And that's the part we know for Klarna, but we don't know for M-Kopa. So we're going to do a little hocus pocus. This is like a CFA level 1 stuff. and enjoy. And I'm happy to take questions and do more tutorials on this. In fact, I will, whether you want me to or not. Okay, so now let's do Klarna, because so M-Kopa took the first quarter revenue and annualized it and got to 500 million. Klarna had 700 million just in the first quarter, and that's a public number because they are now a listed company, so they put that in their prospectus. So if we annualize that, 700 million times 4, 2.8 billion. So it's about 5 times as big as M-Kopa. M-Kopa's got $500 million this year. Klarna should have 2.8 billion this year. 5 and change difference in size. So that's one of the adjustment factors that we're going to adjust for in this approach. Okay, so there's the source. You can see my search terms for all this stuff. So feel free to look, repeat, challenge, question, send me comments. But for those who have done kind of financial analysis based on public company comparables, this is just like a really simple, this is like 25-year-old sort of Wall Street equity analysts will know this. Okay, so the other thing we need to adjust for is the shares outstanding. So Klarna has 377 million outstanding. I know this is from AI, but this is also in the prospectus, so this is correct. The prospectus, which is the document that they publish when they go public, which they have now published, which has that same share count, or like just almost exactly like just some tiny difference, 377.1 or something. So there's not many shares. So now we can figure out what's the revenue per share for Klarna, and then so here we're adjusting for the number of shares by putting the share count as the denominator in the equation. So here we go, 377 million shares. And okay, here's where we annualize the revenue. 700 times 4 is 2.8 billion, billion revenue estimate versus $500 million dollar revenue estimate for M-Kopa. So the estimated 225 revenue per share is the 2.8 billion in revenue divided by the 377 million shares outstanding. And so that's $7.65 per share. So a fair bit less than M-Kopa. Don't think that has a meaning. That's just because Klarna has decided to slice their pizza into more slices than M-Kopa. They've got 377 million shares. M-Kopa's got 4.5 million shares. So the revenue per share sort of is distorted by the share count. Just hold that thought. So where M-Kopa had $100 revenue per share, Klarna has $7.65. Now, here's where we're going to derive the price. Follow me here. Here's the current price. This is literally the price right now on the stock exchange of Klarna. It's $43.43, $43.03. So we can figure out what's the revenue multiple, because what this means is for each share has $7.65 of revenue sort of available for it if you were to hypothetically distribute the revenue among the shareholders, which you couldn't, but like that, it's a hypothetical. It's the framework for this valuation that's the best practice gold standard for valuations that have a public company comparable. So they have $7.65, but people are willing to pay $43.03 for that $7.65. Do you understand? So people are willing to pay 5.8 times the revenue for a share of Klarna. 43, there's a revenue multiple of 5.8. So here's how we got it. 43.03 divided by $7.42 of revenue per share. And that gives you a 5.8 times multiple. So that means this, the stock market is willing to pay for every dollar of revenue, they're willing to pay $5.8 in share price, which is normal. This is a fintech valuation, 5.8 times revenue. In fact, I mean, at the end of 2021, this would have been closer to 12 or even higher. But these days, that's a good fintech, growing fintech multiple, and Klarna is kind of following the same growth trajectory as M-Kopa, which I'll demonstrate in later videos. So we basically back that out, and we say at a 5.8 multiple, this values M-Kopa's shares at 110 revenue per share times 5.8, $643.50 per share. So you might notice that's a bit different from $26, yeah? But yet this is like the best practices. This is the way that a share from like a truly independent valuation firm would be valued. Now you might think of that as sort of the top end because they'll probably take like an emerging market discount, but not from $643 to $26, dummy, like from $643 to $550 or something like that. So maybe that 5.8 multiple because it's emerging markets, because M-Kopa deals in exotic currencies and Klarna doesn't. Instead of 640, maybe it's like 550, so it's like a 15% discount, and maybe it backs into like a 5x multiple, which, as it happens, is a multiple that Watu Credit, which is in the exact same business of phone finance and other goods finance in Africa, raised money at a 5x revenue multiple. So like it's validated by a couple different ways. And you can't, the problem with the public, this is why it's the gold standard with the public company comparable, is you can't say that price is wrong because the market is paying this price for a share. So you can't say that's a fake value. Like, I don't know, if Toyota Corollas are selling for 3 million shillings, you might say that's crazy, they're only worth 2. But if they keep changing hands between knowledgeable buyers and sellers at 3 million, well, guess what? You're wrong. So this price really throws into question in this multiple the $26. I mean, they are not off by a little bit. Like I said, they're off by a factor of 20. And I would say there's other approaches to the value of these shares that actually get into something in the mid hundreds, like 500 plus. And you know, they could be argued that the valuation should be done as of December 2021, which is when they consummated the thing, because that's when it was, the shares were the most valuable, which is not a coincidence that they consummated this crazy split at the time the shares are most valuable. It's kind of like at the time that silver prices go way up, thefts of silver goods in people's homes go up because it's more valuable. So they, you know, the theft happened because of the high valuation. So the valuations have gone down a bit since then. You know, maybe this would have been $1,000 a share of M-Kopa at the end of 2021, and it's less today. You know, I don't know, but like this is a starting point, and I would, this, I think you can say, because of the 643, even if you adjust that for emerging market, you're well into the mid hundreds. Take Watu's credit, Watu credit, which raised money at a 5x revenue multiple, and you're kind of at 550. Like you, and there's another way that I'm going to show in a later video. You can approach it where you get to the same answer, and so we can reject the hypothesis that the ordinary shares are worth $26. Now, backup for the share count in M-Kopa is down here. The yellow are the legitimately approved shares. The unapproved share counts are in pink. So this is basically anything with the proper resolutions in yellow. In pink, it's not. So M-Kopa might say that there's 17 million shares. Still, you're way above $26 per share, by the way. You're still above 100. But you know, these ones in pink are not legitimately approved, as you know from my prior content. So anyway, hope that explainer helps. You are now smarter than most people valuing companies, including the firm that is on Wednesday at this kind of Gaslight Festival. You're going to hear about a valuation of $26. A firm, that serious firm, and they produced like reams of documents. There's 45 pages with their notes and whatever backup, and it's going to support the $26 per share. It's going to be one of the buzzwords you're going to hear. Houlihan Lokey is the firm that did it. Here's the problem. It's complete bullshit, and you can see it from this. They did not use this public company approach. They used an approach where the management gives estimates of future revenues, and then they take some math and do chugga, 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 and then they produce a thing. They also did go to some comparables, and they used crazy stuff like an Egyptian appliance manufacturer that basically is part owned by the Egyptian army, and so it trades at some really low multiple because obviously an army-run refrigerator manufacturer is not a fintech, not an exciting buy now pay later fintech. So it's 1x multiple. So they're using these kind of crazy comparables out of Africa, but not in any sort of thing. And then they're ignoring comparables like Klarna, which is the most comparable of all the comparables. And luckily we have a fresh price because they just listed this thing on the public document. So anyway, I hope this helps. There's gonna be more on Klarna. Probably after the Wednesday event. So enjoy. Hope that helps.